Just seconds after Palantir released its Q4 results on February 5th, I posted this, an Nvidia moment coming for Palantir. But how do I reconcile this against what I said in the last video? I wouldn't say I got a lot of hate for it, but there was certainly a lot of disagreement. This was my Dear Tom Nash video. It wasn't really focusing on him directly, but more focusing on the idea of Palantir being a trillion-dollar company within the next 5 to 7 years. And the reason I don't think this is a meaningful argument to push is, what are you really trying to accomplish by setting this lofty target? There's really no benefit to it unless you're trying to sell your own stock through hype, was my point of view. Because if you actually want Palantir to be a trillion-dollar company, you would want to accumulate as much as possible and for it to happen naturally, not to hype it up unnecessarily and cause a lot of expectations to get priced in when they are not actually reasonable. So I'm not overly concerned about it, but I'm just sharing my perspective. As a long-term investor, you should not want there to be a lot of hype around a company. It's just not a good thing. So nevertheless, in this video, I'm going to be outlining what would have to happen for Palantir to hit multiple trillions in market cap. Do I think it will happen in the next 5 years? No. Do I think it will happen after that if all goes according to plan? Absolutely. My point was, don't get super excited because it might not happen in the next 5 years, and that means nothing, right? Because the stock can still outperform hundreds or thousands of others and still be a great investment and not hit this trillion-dollar target. It's just unreasonable in my opinion. So with that said, one of my concerns is about boot camps, right? Everyone's saying how great boot camps are. I agree. Great consumer strategy for attracting customers and demonstrating your value up front. And this has been what Palantir's done since day one, but AIP has really taken that to the next level. So Arnie's great. You should definitely be following him, subscribe to his newsletter. I think I get doubled emails. I think I'm on that twice for him. That's how much I like it. And what he said here is something that is really key to me and unlocks that future scenario that I'm talking about. So he said boot camps are efficient to acquire customers, yet they involve humans, right? So how are you possibly going to onboard thousands, if not tens of thousands, if not hundreds of thousands of new companies if you need humans, right? Keyword humans, keyword engineers, keyword key top talent, when Palantir is getting a lot of inbound for great talent. But of course, talent is a scarce resource, and you need top talent to actually do meaningful boot camps and not lose to, competition or alternate options, right? So will boot camps be entirely run by AIP agents? Now, this is the key, right? Because if you can infinitely scale boot camps, everything's unlocked. So this was a piece that I was not considering. We haven't heard Palantir talk about it. Palantir's AIP is much more scalable than Foundry, which was even considered a consultancy because you have to send your forward deployed engineer in and to actually do the work. AIP has completely thrown that out the window, but it still requires a lot of upfront work that is limited by the amount of talent that Palantir is able to attract, right? So this is a key limiting factor, and this is why I say I think Palantir can be a $50 to $100 stock in the next 5 years based on that scenario, what we all know right now. So with that said, let's actually start to calculate some of these numbers of what it could look like. All estimates, right? Estimates will be very wrong. I do, however, very much disagree with the idea that you should not be modeling. So I had a number of comments in the previous video that you shouldn't even do forecasts, right? Because you're not even going to be close. Palantir's going to have new projects and new products, and you have no idea of possibly being able to accurately do it. Well, the whole point is not that you accurately get a share price number and make a decision based on that. The whole point is you can see in a very general, broad aspect, what does the future look like if we plug in crazy projections, right? Which is what we're about to do. What does that look like? And then you make your decision, because if you don't do any forecasting or modeling, even on future aspects that are going to need to be developed into the future, right? AIP is not going to be able to scale to even capture a fraction of 16 million businesses if they don't develop the new processes to be able to do that, which they're working on, right? But this is why I take offense to the whole idea that you can't model anything. Now, that's nonsense, because Palantir's share price in 10 years is going to be valued off of what their business is doing. It's not going to be valued off of nothing. So, of course, you have to figure out the numbers. It's about getting in the general vicinity, and then you make a decision based on one forecast, another forecast, a bear forecast, a hyper bull forecast, and you go from there. It would just be totally irresponsible for me to say don't think at all about the fundamentals. And this is why I created this poll yesterday. Is Palantir going to be a $1 trillion company next year? Of course, tongue-in-cheek, a joke. 1.1 thousand people responded, and 17 of whom said, yes, valuation is an archaic concept. Don't spend time on fundamentals. So, of course, many of you might be trolling me because this was the whole point of the previous video. But the answer is no, of course not, right? Sure, something could happen, a 0.001% chance, and Palantir could be a $1 trillion company next year. But the point is, but it doesn't mean it won't happen eventually. So I care very much about giving you accurate information. And if you don't want to follow me because I'm focused on the fundamentals, that is totally fine. Because Wall Street's focused on the fundamentals, right? And as long as we can be one step ahead of them, that's where we have our edge. We don't need to be 10 steps ahead of them in the wrong direction, right? We want to avoid that. So anyway, getting back into our forecast here, AIP penetration, and by the way, these numbers that are shown here, I got from ChatGPT. Of course, you're not going to have a very exact estimate of the quantity of businesses. You can play with this if you want on your own, but this is just what I'm going with. I think, again, generally correct, directionally correct. There are fewer businesses with a higher revenue than there are with lower revenue. So we're just going with that. AIP penetration, 1, 2, 5, 5%. I think as the companies have more revenue, they have a more of an ability to spend with Palantir. So in the small, medium businesses case, we're going with that. In just a large business case, we're actually going to say no small, medium businesses, and we'll take a look at the impact on valuation. So these are the two cases we are doing. And now I want to show you AIP customers for my estimate of what this looks like. I'm saying that based on that multiplication, right, we have 260,000 AIP customers. Okay, this sounds like a heck of a lot. They're doing 600 boot camps. They're not doing thousands and thousands of boot camps. So this is a long run figure of what could it look like if, back to that earlier point, they solve the automation of the boot camps and this percentage of businesses are willing to pay for Palantir's AIP. So what does that look like in this other situation with our large businesses, maybe 60,000 large businesses, but as we're about to see for the AIP spend, it's going to depend on an organization's ability to spend based on their revenue and their profit. So I put 5% here because I think the average profit margin for a business of any kind is roughly around 15% or so. So if AIP is taking 5% of that 15%, maybe they're just spending, and you could say, of course, AI is helping to grow the business, but everyone's going to be using AI, so there is more competition. So those that don't use AIP are going to be at a competitive disadvantage, but in this situation, many businesses are going to be using AIP, so you just have to generalize, or you're never going to reach a conclusion. So we're just saying 5% is spent on AIP in both cases, I believe. So let me just show this. Yep. And let's go back on over to what is the cost for the organization to use AIP at 5%. So for a $5 million business, that's $250,000, then $500,000, $2.5 million, $5 million, which is consistent with what Palantir's commercial division is doing and where it's heading, right? So that's a weighted average cost for the organization of $1 million. So what I'm going to show you in just a moment is what we're actually going to do with this. 260,000 and 1 million cost. Now, let's just check on what this looks like for large. Again, it's the same thing, but the weighted average contract value is 3 million, okay? So much higher, obviously. Now, how does this turn into revenue? Well, we're just going to multiply across here. We multiply, it depends how you want to set it up, but I just multiplied across. $25 billion for small businesses, $50 billion for the step above, $125 billion for larger, and $50 billion for enterprise, okay, for a total of $250 billion in revenue, all right? This is just crazy. And if we want to just look at our large scenario here, where we're saying that in this case, we're being more conservative, if you can even call this conservative, where there aren't any small businesses, okay? And that's what we'd have. So it's 200 billion, basically, coming from the larger organizations, right? And if you want to see the full thing here, that's the breakdown. So what we're going to do now is plug in this napkin math into indomitable.app, linked in the description if you want to do this yourself. And we're going to leave government the same. We're just going to save that. Leave average contract value for government the same because we're not playing around with that for a valuation perspective. It all pulls in from Wall Street. And what I've had to do here is wildly extend the ranges for our sliders. So what did we say? We said for the overall scenario, we're going to reach 260 or so thousand. So we'll leave it there, and we'll have Palantir ramping this well over time, right? And I think this is insane to expect over the next 5 years. It's absolutely not going to happen, but we could make this a 10-year estimate if you really want to. But we'll click update there. Okay, and you see it ramping. Actually, you know what? I'd probably change this. It's definitely going to be much more of a, an S curve, if you will. It's probably going to look much more like that if it does happen. Something along those lines. But again, this is ridiculous. I don't know if you believe this will happen or not, but I certainly think this is going to be very challenging. And so what's going to happen associated with this is a drop in the contract value, because we have a lot of smaller businesses that we said it's going to be about $1 million per contract. So this is basically what we had going on here. So let's click save. And you can run the different situations. That's the whole point of this tool that I made, tailored to Palantir specifically. These are Palantir's numbers coming from Wall Street consensus, and you tweak them from there. It's really the tool I dreamed of having. So we're just going to keep gross margin flat. Okay, we're really going to probably have to keep sales and marketing pretty high, I would say, because let's just do 30, because we got to make sure they're actually even able to attract that many companies, right? Something's got to give when you have 260,000, right? Which I think is crazy. But we're doing this situation nonetheless as an extreme bull case, and we're going to keep the administrative expenses fairly high because that's associated with running the business. And R&D, we're going to need a good amount of R&D. I think R&D ramping associated with the ramp, as we talked about with using AI to deploy. And then once we have all of that, we're going to click generate to get our income statement. So what does this look like? Wow, there it is, the $250 billion in year 5. Now, you have to decide what year 5, what that actually means, right? $3 billion in government and the rest in commercial, which is really ridiculous. And that comes to operating income of $42 billion. Okay, now we have to decide what is the multiple based on that. Well, if you're interested, this is Palantir over Nvidia, right? So this is actually dividing, as you can see here. So Palantir on the top means Palantir's value relative to Nvidia's has declined recently because Nvidia has gone crazy. And you could say Palantir is, in a relative sense, undervalued based on that move if the two are supposed to move together, which I think you could generally say they are. So over the past year, pretty close range. So what I would say is we want to figure out, what is Nvidia trading for on an EBIT multiple? So it looks like Nvidia is trading for about 30 times. We'll just round up 30 times EBITDA, or in this case EBIT, because we're not dealing with depreciation amortization. So we'll say Palantir's multiple gets compressed over time. Click submit. And this is a little silly, but I guess we could have it smooth it out a little bit just to see what that would look like, because the revenue is growing so fast, it's actually having a big change on the price, right? And so it's a little silly in this situation. Again, very extreme, but it's important to think about this. I'm not saying it's irrelevant to think about a situation like this, but in terms of the impact on the stock price, as you were seeing in this graph, currently where we are right now is barely even recognizable. And so this is what people mean when they say you could buy a stock when it's overvalued and it can really grow into its valuation, go well beyond that. So based on our numbers here, 500, 600, 800, 600, just in that range, that is over a $1 trillion market cap. Again, ignore the years because I think it's extremely unlikely it happens in the next 5 years. But these are the numbers making that a reality. And again, we could run the same thing, but just focusing on larger businesses to get a better understanding of what we talked about right here, which is 60,000 AIP spending $3 million. Okay, so let's dial it back to 60,000, which sounds a lot more reasonable, even though it's still insanely high. We'll click update, and they're spending 3 million, so we're going to actually just keep this flat. We'll just save that, and then we're going to keep everything else the same, all right? But we're going to click generate so that it redoes the numbers for us, and it tweaks them. So now we're just 183 billion, funny that I'm saying just, right? 30 billion in EBIT. So we're going to actually dial these numbers back down a bit because now we have a less growth, right? So less of a multiple we could expect. So what does that look like? Again, a little bit shy of $500 per share. So these are the assumptions. I ran through all of this because I want it to benefit you. Please let me know in the comments. Do you think this is reasonable? Not in the next 5 years. Of course, you could tell me if you think this is going to happen in the next 5 years. I don't know why you're spending time watching this video. You should probably be spending time trying to make as much money as humanly possible to pour it into Palantir stock. But if you don't think it's going to happen in the next 5 years, which is the camp I'm in, I think this is more a late 2030s, early 2040s scenario, 10 to 15 to 20 years, we could see Palantir $500 to $1,000 per share in a bull case scenario. Okay, this is a developing situation, but it is one that I want to keep you updated on and would love to hear your thoughts. If this was educational, please leave a like. Let me know what else you want to see. Until next time.